Well, good morning, everybody, and welcome to our webinar. I'm delighted to be joined today by Ollie Black, who is our R&D tax consultant. Welcome, Ollie. And also with our guest speaker, Maria Dimitrova. Welcome, Maria. Maria is an ISO advisor and lead auditor. So, as the name suggests, this webinar is all about R&D tax, and it's also about the ISO process. We will have a live Q&A at the end of the webinar today where you can put your questions to Maria and Ollie. If you're familiar with Zoom, you'll be familiar with the Q&A panel. So please use that to post your questions as we go through, and we will come back at the end to answer as many of those live as we have time for. So at this point, I'm going to hand over to Ollie, and I will see you at the end of the presentation. Over to you, Ollie.
Thanks, Jo. Hi everyone, hope everyone's having a good day so far. So my name's Ollie. I'll be talking to you today about R&D tax relief. And then after my presentation, I'll be handing over to Maria, who will go over ISO 9001, which links in with R&D because having the ISO 9001 can help you track your activities. And by tracking certain activities that you have, could potentially increase the size of your R&D claim, and also help you prepare the R&D report later down the line. So if I give you just a quick background, we're Grunberg Co. We're an accountancy firm based in North London, and we specialize in own and managed businesses. Now we offer the full package of accounts, tax to other services such as R&D tax relief, which is what I'll be talking about today. So R&D tax relief was founded in the UK in the year 2000. It's a corporate tax scheme as well. So it links with your tax returns and a claim gets submitted with your tax return. The aim of the scheme is to reward risk-taking and innovation within companies, specifically within the fields of science and technology. So I'll go over later on what this exactly means. So there are a few kind of I would say points to look out for in your company to see if you might qualify. The first is, do you employ any technical staff? Do you have any software developers? Do you have any engineers? Do you have anyone who has degrees in one of those fields or has maybe 5-10 years experience? Now, one thing to remember is R&D tax relief is not specifically just for software and engineering. There are other types of companies that can claim as well. I've made claims for companies that do scaffolding before, to architecture firms, to software companies, to pharmaceutical companies. There's a full broad range of companies that can claim, but the main aim of the scheme is to focus around technical staff. Do you employ any sort of technical staff? It's one thing to look out for. The second thing to look out for is if you've received any innovation grants. Have you applied for any Innovate UK grants and had those? Because that is quite obviously a good thing for HMRC to see that you have actually already done R&D, because you have to do R&D activities in order to apply and receive an innovation grant as well. You need to show those sorts of activities. And another thing to look out for is if you have any sort of valuable IP. So if your company has generated any type of intellectual property around products, so you've come up with something innovative, that is also something that could indicate you have R&D activities. So what exactly is an R&D claim? So within an R&D claim, we'll analyze the projects that you've done throughout the year. We'll see, do they meet certain technical criteria? Do the projects qualify? We'll then check the financials associated to those projects, and we'll compile those into a report that gets attached alongside your tax return to HMRC. Now, this is also where it can tie in with what Maria will go over later, where tracking those activities that you've had throughout the year will help you later on when you compile your R&D claim, because you'll already have access to those types of activities, which would be great. So that's definitely something that we'll discuss also in detail in a bit. So within that report, we'll detail some what I'll discuss later, technological advancements and uncertainties that you would have had within your projects throughout the year. This is a few pages of a technical narrative that the tax inspector will read to make sure you meet the criteria. Now, in terms of time limits and how long do you have to make an R&D claim, you have 2 years. So let's say your company is a September year end right now. So the furthest you would be able to go back is September 2018, that year end. And you would have until the end of this month to submit a claim for that year. So any expenditure you may have had from the 1st of October 2017 to the end of September 2018, the end of this month would be the last time that you have to submit a claim for that duration. Now, in terms of HMRC's process as well, once you make a claim, it takes them roughly 4 to 6 weeks to review it. And if you're owed any money back from HMRC, it's within that time frame that they would normally give you your money. On top of that, they also have 12 months of what's called an inquiry to ask any additional questions about your claim. For example, if they want to know any or see any additional evidence of the technical process, or they have any questions around the financial side of the claim, it's within this window that they will ask. Now, it's our job as an accountancy firm to limit the amount of questions that HMRC could come back with, or in fact, to try and limit them coming back at all. So that's kind of where our job comes in. And it's also to help you compile the report that will get submitted to HMRC. Now, as I mentioned earlier, there are a few technical criteria that you'll need to meet in order to qualify for R&D tax relief. Now, there's 2 main criteria that your project has to meet, and it has to meet both of them as well. The first of these is that you have to seek or have sought to achieve scientific or technological advancements. So what this basically means is that the competent professionals within your company, competent professionals being people with experience within their field, what we discussed earlier, where you would have someone with a degree or experience within that field. So a competent professional would need to gain new technical or scientific knowledge above the current state of the art. So state of the art means any information in the public domain. So anything that you can Google, anything within documentation, anything that's readily available, that is the state of the art. And your competent professionals will have to gain new knowledge that wasn't within the state of the art. So for example, you have a software package A and B, and you want to integrate those together, and your developers try to look online as to how to do that, and they can't find any solutions online. So they experiment and they come up with a new solution to integrate these 2 softwares together. They have now created new knowledge, new technical knowledge as to how that's done. They could then use that in future projects if you had a similar project. So that is a technological advancement. Now, a technological uncertainty, which is the second criteria, is that whilst trying to achieve your technological advancements, you have challenges along the way, and you are uncertain as to how you're going to resolve those challenges. And that's the second criteria. So let's say we're discussing the example before of software A and software B. Let's say it took your developers 5 minutes to do, probably wasn't too complicated. But if they spent a few weeks or maybe a few months, went through multiple iterations, some of those may have failed and got thrown in the bin, that would show that there was uncertainty and you were unsure as to how to resolve those challenges. Now, it's very key to separate business challenges from technological or scientific challenges. So if you just had a tough client and they kept changing the requirements every so often, and that was challenging, or how are we going to win clients, and you might try and come up with a certain business model or some logic, that might not be linked to the technological side. So we want to specifically try and focus on challenges within the actual development of your project, whatever field you're in. So that's definitely something to look at. Another thing is that failure is acceptable and actually quite good by R&D standards. So if you failed and a project hasn't worked and you've thrown it in the bin, it's almost assuring that you're going to be able to get R&D for it if it's because of technical reasons why it's failed. So you've tried to integrate software A and software B, and you've completely failed. Your developers say, this isn't possible, we're not going to be able to do this, and you've thrown it in the bin. If anything, you'll be able to actually claim money back from that project. So failure is quite good to show for R&D. And this is also where in the ISO later on that Maria will discuss, tracking those activities and seeing how those are done throughout the year, you'll actually be able to put that information directly into your R&D report when you come to file an R&D claim. Okay, so those are the technical criteria that you would have to meet. So let's say your projects are all good, we've had a discussion, you meet the criteria, what's next? So the next part that we would look at is the financial criteria. So we've got the projects. Now, what costs can I claim? And what areas within the claim should I be looking at the costs? So first thing is we need to see what type of company you are. Are you an SME or are you a large company? So as you can see on the slides, there's some very strict criteria as to the difference between the two. The main one being under or over 500 employees. And there's also some criteria around the turnover and assets that you have in the company. So the SME scheme is far more lucrative than the large company scheme. You can get roughly 33p back from every pound spent under the SME scheme. But under the large company scheme, it's roughly half to a third of that. So roughly 10 to 15% of your total expenditure on R&D, you can get back as a benefit. And that's the main difference between the two. So once we've assessed that, we would then look at the cost categories. Now, there are 5 very strict cost categories, and they're the only categories that we can claim. The first is payroll. So this is gross salary, employers' NI, employers' pension contribution, any bonuses throughout the year, and any reimbursed expenses that are specifically for R&D. So if you've taken a flight somewhere specifically to meet a development team in another country, you could potentially claim for that cost as well. So this doesn't include dividends, as this is through PAYE. So that's your first cost, which is normally the majority of most people's R&D claim. The second cost category is externally provided workers, what most people know as freelancers. These are people who will work in your company on a time and material basis, and you will have autonomy over them. So you will be managing their day-to-day activities. Those are freelancers. Now their costs are capped at 65%, as HMRC assumes a 35% profit margin. That's what they've come up with after doing their own research. They've decided that that is the figure for profit margin. That's applied across the board. And that same percentage is applied to the next cost category, which is subcontractors. Now, these are people you have paid a fixed fee for a deliverable. So as I was mentioning before about this example of you've integrated 2 softwares together, and let's say that's done, and now you want to check that no one can hack your system. So you pay an external firm £10,000 for penetration testing of your system to make sure you can't get hacked. And they deliver the results at the end once they've completed those tasks. That's a fixed fee for a deliverable. So that's subcontracting. The fourth category is software licenses. These are any non-standard software licenses that you would have purchased throughout the year to help you with your R&D. So no Microsoft, Windows or Office, none of those type of software licenses. But let's say during your project, you had to pay £1,000 for a license to help you test part of your product you're making. That's the type of license that we would look at claiming. Now, the fifth category is consumables. For most companies, this is just an apportionment of light, heat, and power. So that can be included within the claim. Not rent. Rent is non-allowable. In fact, any costs that are rental in nature are not allowed in R&D claims. So as mentioned for software licenses, you actually can't claim any sort of web hosting or cloud hosting either. Other costs that can be included in consumables are actual material items as well that have been expensed and wholly consumed within the year. So let's say you're an engineering company and you're trying to build a certain machine, and in order to build that, you have bought lots of different metals and you're trying out materials, and you're trying to work out how to get this machine the most efficient using the right materials. And to do that, you spent thousands of pounds testing lots of materials. They are consumed throughout the process and you've binned them and expensed them throughout the year. Those can also be included in your R&D claim. Now, let's say you have all of these costs, you've taken them all together. The next thing that you will have to do is apply an R&D percentage. So let's say you've totaled up all of your payroll costs and you have a developer who is, let's say, on £50,000 a year. You go, okay, how much of their time throughout the year was either directly or indirectly related to R&D? And then what we would do for this is, if you have timesheets, we'd first look at those. But if not, HMRC says that you need to take a reasonable apportionment of time, and that is then put towards a percentage which is applied to their costs. So we go, okay, 3 days a week they spent on the tough activities, they spent on solving uncertainties. So that's 60%. So we'll take 60% of the £50,000, and that is our qualifying expenditure. Now, as I just mentioned, it's direct or indirect activities. So let's say you have a manager in your team who isn't directly writing any code or doing engineering or any technical work, but they're managing those people. We can also include that time towards the R&D claim. On top of that, we can include some HR time. If you've tried to recruit someone who is specifically for an R&D role, that can potentially be included. Testing time. So let's say you finished a product and you sent it to the rest of your company to test out and give feedback. That can also be used, and lots of other activities. Now, the indirect, the easiest way to look at this is, could the technical team have solved their challenges, the uncertainties, without the help of this individual and that time spent? So the management time has helped the developers overcome these uncertainties, and that's what we're looking for. And again, this is where your ISO can come in handy, because tracking those times and tracking the sorts of activities you've had throughout the year will help you when trying to come up with these percentages as well. Okay, so let's say you've totaled up your entire claim and we go, okay, we have £100,000 total of qualifying expenditure. What does this mean? How does this actually benefit us as a company? So at this point, we will then do a financial calculation. We will put this number into your tax return. And the way that we do this is, if you're an SME, you get 130% uplift first. So as we mentioned, you have £100,000 of qualifying expenditure. This then becomes £130,000 of uplift. So let's say your company is £130,000 in profit at the moment. We would add £130,000 to your tax computations as a loss. So this would bring your taxable profits down to zero, therefore wiping out any potential tax that you would have had to have paid. Because at this rate, you would have had to have paid roughly £25,000 of tax. And by adding the R&D claim into this, you now don't pay any tax. So you actually have a benefit there of £25,000. So that's the first way that you can have a benefit. The second way is, if your uplift pushes you into a loss, you can sacrifice this for a tax credit of 14.5%. And by tax credit, this means an actual check from HMRC into your bank account. So it's actual cash that you receive. Now, if you're at break even, let's say we go, okay, here's £130,000. This is our uplift. This pushes us £130,000 into a loss. This then gets sacrificed at 14.5%, and you get roughly £20,000 back as a tax, not rebate, but as a tax credit. So the next way that this works, which links to what I mentioned almost at the beginning of the presentation, is the 33p back from every pound spent, is if you're very heavily in losses, you can actually sacrifice up to 230%. So you have the additional £130,000 of uplift, and you have the original £100,000 you spent, which has already gone through your P&L, and you can sacrifice that £230,000 of losses at 14.5%, which is roughly £33,000. So you spent 100 grand, you've actually get back £33,000 as a check back from HMRC into your bank account. So let's say you've increased your losses and you actually don't want to sacrifice this for a tax credit. You can also carry those losses back. So let's say you made profits the year before, you can actually carry those losses back and get a tax rebate based on your previous profits, or the opposite, you can actually carry the losses forward to offset any future profits that you may have as well. So that's how it works for the SME scheme. Now, the large company scheme is slightly different. You actually times the amount, the £100,000 of qualifying expenditure at 13%. So you get what's called an RDEC is the name for it, but you get a £13,000 credit paid to you from HMRC, and this goes into your accounts as an income above the line, and then this is taxed through your tax return. So it roughly works out at about 10 to 11 sort of percent, which is where I mentioned before, it's sort of a third of the amount potentially back that you get from a SME scheme. So that's it for the R&D portion of this presentation. And as I mentioned, you have the technical criteria first, that's the first step. Then you have your financial criteria to make sure that you collect all your costs associated with the project. Then you have the financial calculation to see how much you can get, and this then gets submitted to HMRC, and that's the overall process. So at this point, I'd like to hand over to Maria, who's going to go over ISOs, or specifically ISO 9001.
Thank you. Very interesting, your talk. Good afternoon, everyone. I'm Maria Dimitrova, Head of Business Development at IMSM. Thanks for joining. I'm as well a Quality Management and Information Security Management Lead Auditor. And I shall be talking this afternoon just to give support to what Oli has said about quality management systems certified against ISO 9001, the latest version from 2015. So I'll be happy to take questions later on. And before we get started with quality management, please let me introduce you to our company. We are ISO consultants, and we have been devoting efforts to helping companies implement ISO standards for nearly 30 years now. We have customers in over 20 countries, so we're quite international, good background, and we cover all sectors. We also cover all kinds of companies, but do have a little something about working with micro, small, and medium-sized companies. So if headcount-wise, you are anywhere between 1 and 250 people, you would certainly benefit from our methodology. And before we discuss our methodology and how we can help you implement an efficient quality management system, let's see why you actually might need to implement it. So in support of what Oli has said, let's get started with quality management systems. So, disclaimer, joke, whatever, but let's be very clear from the very beginning. There are no statutory, no regulatory requirements for a quality management system certified against the ISO 9001:2015 to be implemented in order to claim R&D tax relief. However, it is common sense that organizations should be able to identify the processes for which they could claim it, and most importantly, they need to demonstrate that they develop R&D activities to claim tax relief. So as Oli has just explained, it is essential that you can efficiently track those activities, and having a quality management system is the best way to demonstrate it. Your quality management system is actually your innovation logbook to claim it. So, talking practicalities, your quality management system would help you not only track your activities, but always and continually improve them. It is a powerful tool to demonstrate that you plan, you develop, you control, and you improve your R&D processes. Improvement is key to innovation. So I'm not telling you anything you don't know when I say that R&D is by default a fast-paced environment. So the ability, your ability to control changes is going to be essential to ensure that there is no adverse impact, to put it that way, on conformity to tax relief requirements. So a fully operational quality management system will help the organization demonstrate that controls to the R&D processes are applied and the results to be achieved are defined. It also helps and shows that reviews as well as verification and validation activities are conducted. And from a more general perspective, any necessary actions are taken to resolve potential problems determined either during reviews or throughout verification and validation activities. Most importantly, it is an ISO 9001 requirement for a quality management system to retain information on those activities. I'm going to repeat myself. Look at as the innovation logbook you need to claim R&D tax relief. So we could say, just to represent it, that a quality management system implementation offers an internationally recognized and accepted framework, that it helps R&D organizations determine the stages and controls for design and development, as well as document the information needed to demonstrate that all relevant requirements have been met. Which ones? Well, I'm going just to say exactly what Oli enumerated a while ago in a slightly different way. So you would be able to demonstrate that you plan, you control aspects such as the nature, duration, and complexity of your activities, and have it logged. The required process stages, including applicable reviews, verification and validation activities, responsibilities and authorities involved in the R&D processes, resources, internal as well as external resources needed, the need to control interfaces between people involved in the processes, remember audit manager, the need for involvement of stakeholders, and most importantly, the level of control expected by stakeholders and other relevant interested parties, including the HMRC. So, talking interested parties, and quite technically speaking, now I'm going to say something that may surprise you, but technically speaking, there are not too many quality management systems that explicitly identify HM, revenue, and customs, say relevant to their activities, activities and process party. It would be good if you could drop me a comment guessing why. And we are going to discuss it, if any comments come in, at the end of the session. That's a technicality. It's nothing bad, not uncommon, just some curiosity with regards to quality management systems. So, this said, I'm happy to explain our methodology for you and how we actually can help you get it done and quite quickly. So in the first place, our assessors will help you identify what you would exactly like to achieve, what your objectives are, what your idea of success is, or to put it in a technical wording, will help you identify the scope of your quality management system. Then our assessors are going to identify and describe, to help you identify and describe your processes and their interactions. In other words, what you do, how you do it, and how it is being reviewed and improved. Thus, your quality management system will generate the quality management manual. It's going to be created. Interestingly, the latest version of ISO 9001 no longer requires that organizations have a quality management manual. However, remember your logbook. It's essential as a reference document, and it's essential to your claims. So it helps demonstrate that you're on top of your R&D processes, and it could be used in many ways, many additional ways. You hire new people, give them the manual, best induction material you have, trust me. So our implementation approach includes customized training programs, focusing on improvement awareness, which is essential to fast-paced environments. And stage 4, the terrible one, with key processes in place and staff trained to consistently follow these, the next step is going to be your external audit, third-party audit. We collaborate with an independent body, so it's not going to be easy, but it's going to be smooth and nice for you. And the last step would be your organization getting its certification under ISO 9001 2015. So, to wrap it up, we are quite often asked 2 questions. First, why should we implement a quality management system? And the second one, why should we do it with you? And don't quote me, please, but my answer to each of them is inevitably the same. You don't have to. Implementing, and now I'm very, very serious, implementing a quality management system is a strategic decision. It doesn't matter how much I insist that it is a good thing. If you don't perceive it such as, you're going to be very wrong, but you can do that. You should first consider changing your mind and then going for it. And with regards to going with us, you don't have to. You can do it on your own. You can do it with any of our very good competitors out there. There are very good people out there. That's true. You can't get it wrong with them. You can get it only expensive, but you can do it if you go that way, either on your own or with someone else. Just keep an eye on the key success factors and you'll be fine. Should you go with us, I would be glad if you do, you would certainly benefit from the one thing that we do better than anyone else. Let's say that thanks to our methodology, the quick one, 5 steps, everything wrapped up, and mostly thanks to our very, very good assessors, we actually provide extremely good quality services for a fixed price. So this said, Ollie, if anyone has questions, I think that we should move on. What do you think?
Perfect.
That was perfect. Thank you very much, Maria. Thank you very much, Ollie. We do have some questions actually, which I'll field out to you now. We'll try and get through as many of these as we possibly can. So first one I think is for you, Ollie, from Ash. And this is, can you take the tax rebate if there are taxable profits on the tax computation?
So yes, in terms of tax rebate, so if you're going to pay tax, then yes. So let's say you have a previous year where you paid tax, you can carry back your R&D and get a tax rebate on those costs. If you're looking at your current year, in terms of a tax rebate, you've already paid your tax. So let's say you submitted your tax computations for this year and you've already paid tax, and the R&D claim is put in after that, you'll actually get a rebate and you'll get your money back from HMRC. The opposite is obviously, if you haven't yet paid your tax and an R&D claims in, that will just save you having to pay your tax, as opposed to receive it. You won't actually receive any cash from them in that scenario.
Okay. Question for you, Maria. Can you become ISO registered just to help with an R&D claim?
Thank you, Joe. So first of all, it's not about registration, it's about certification, just a technicality. And then, yes, you can do that. As I say, certifying against ISO 9001 is a strategic decision. And there are companies that decide to do it to enhance their brand. There are companies that do it because they need to participate in a tender. There are companies who may decide it because their stakeholders require an ISO 9000 certification, and then R&D, certifying R&D processes is a valid and a very good reason to do it as well.
Okay, thank you. Question here from Philip. Can you include in your R&D tax claim improvements made to a project which you've previously claimed R&D on?
Yes, you can. In fact, this is the majority of R&D claims are actually ongoing claims. So let's say you're looking, because obviously from R&D, we're looking at an accounting period. So as I mentioned, the September example, we're looking specifically within a tax year. Now, good luck finding a company who started a project exactly when your accounting year started and finished it exactly when your accounting year is finished. Normally that project is ongoing over multiple years, or you may be enhancing that previous project that you did. So the main thing to look out for in this scenario is that you are still having technological uncertainties and you still have technological advancements. So as long as the improvements that you're trying to make are still challenging and your development team or engineering team is still learning new things as a result of that project, absolutely you can claim.
Okay. Another one for you here, Maria, from Ruth. What other areas of accountancy can an ISO registration help with?
Oh, thank you, Ruth, for this question. That's a very interesting one. Actually, you're bringing up a very interesting issue. ISO 9001 is applicable to all kinds of companies, services, etc. It's widely used in any kind of accountancy companies as well. But I am going to introduce you to two other standards that are very relevant to your sector at the moment. That would be information security, ISO 27001, and business continuity, ISO 22301. So those two standards are extremely applicable to your sector, and 9001 helps you set up the basis for further standard extension to satisfy your stakeholders' requirements. So yeah, just keep an eye on how important the basic 9001 structure is to help you extend further your coverage on information security and business continuity as well.
Okay, and I think we've got time for one last question. This has come in about patent box. So how does the patent box regime integrate on R&D? I think that's one for you, Ollie.
Okay. This can have a 5-second answer or quite a long answer, because Patent Box is quite a large scheme, which actually has some 2017 some changes to it, and pretty much the entire way that it's now calculated is actually linked to types of R&D activities. They have this thing called the R&D nexus. In short, yes, you can use both together, but there are some calculations to make sure you don't what's called double dip, basically, on certain types of benefit. But yes, they can be used together. So let's say you have an R&D claim that goes in and you're quite profitable. So your R&D claim can go in, and then on top of that, your Patent Box still also might be able to reduce your corporate tax rate down to the 10% if you meet the certain criteria for that. Now, doing an R&D claim can actually really help when compiling or putting a Patent Box claim together, because you actually need to go through quite a rigorous process of trying to work out what R&D activities you have and how the patents related to that actually relate to your costs and your income. So obviously Patent Box is all about your profits that you'll pay. So having those R&D activities already assessed from doing a claim can actually really help the process of doing a Patent Box, because there's a lot of crossover in those types of activities. So yeah, lots of companies tend to do them at the same time if they're going to do them.
Brilliant. Okay. Well, I think that brings us to the end of our Q&A session. I just want to take this opportunity to thank Maria and thank Ollie for your presentations and your time today. I hope everybody found it interesting. As with all of our webinars, later on today you'll find a recording of this on our website, and we'll also send a recording by email to everybody who's participated today as a rewatch for you. Thank you very much, and we look forward to our next webinar.